Now more than ever, innovative technologies are fueling change and sparking new ways of thinking. Collaboration between corporations and startups is key to staying at the forefront of these trends. However, finding the right startups can be expensive, time-consuming, and ineffective. But Plug and Play is here to help. As a corporate partner, you will gain access to a whole ecosystem of innovation. Discover startups that meet your tech interests. Stay updated on the latest trends and network with industry peers. We will help you during every stage of your innovation journey, no matter where you are and where you want to go. Get in touch today.
Hello, folks, and welcome to the Climate Change and ESG Investments event hosted by Insurtech and Sustainability here at Plug and Play. We have a packed day for you today, so without further ado, I am just going to jump into it here. Our agenda today is as follows, just these opening remarks here, and then I'm going to pass it off to my colleague for a quick introduction on the sustainability vertical in Alberta. And then we will follow that with a panel discussion. Afterwards, we will do startup pitches, and then we will close it out. Okay. So now I am going to pass it off to my colleague, Kristen, who, as I said, is going to give just some quick background on the sustainability program. Okay.
Perfect. Thanks, Sean. Welcome, everyone. So today, as Sean mentioned, I'll be providing a brief overview of the Plug and Play sustainability vertical, as well as our new office locations across Canada and specifically in the Alberta region. My name is Kristen Coons. I'm the program manager of the sustainability vertical at our Plug and Play Alberta location. So this is my colleague, Catherine Smith. She's a ventures analyst in the sustainability vertical at our Alberta location as well. Catherine works closely with our global sustainability team on a number of other focus areas under the sustainability vertical. So diving into the sustainability vertical quickly here, the sustainability vertical was launched in October of 2019 in partnership with the Alliance to End Plastic Waste. Since then, this vertical has rapidly expanded across the Americas, Europe, Africa, Asia, and the Middle East. And we now have a total of 8 locations across the globe, with over 113 startups accelerated, and our programs have helped startups land over 120 pilot projects. So we're very excited about that. So here you can see our global sustainability locations across the globe. As I mentioned, we have 8 locations. So we've got our headquarters in Silicon Valley. We have offices in Paris, Johannesburg, Sao Paulo, Singapore, and Shanghai. And most recently, our new office locations in sustainability located in Tokyo and Alberta. So our team is growing quite quickly. As you can see here, the locations highlighted in green are the Alliance to End Plastic Waste locations. And we also have some established sustainability accelerator locations identified here in blue. As you can see, we have a very strong network of corporate partners in the sustainability vertical. Some of the notable ones here is like Uniper, Inditex, British Telecom, and Capitaland, to name a few. And we have several sustainability focus areas. So today we have 5 of them. We have the Alliance to End Plastic Waste. So we have a plastic waste focus area. We also have carbon neutrality, sustainable fashion, our clean resources program, which is focused in Alberta with the Alberta government, and also a brand new focus area called Shelter Tech in partnership with the Habitat for Humanity in Johannesburg, South Africa. All right, so diving in a little bit deeper to Plug and Play Canada and what we've done here so far. So overall, we've just launched the Alberta locations recently at Plug and Play. The company is currently expanding across Canada. So we have one location in Alberta with an office located in downtown Calgary. And we also have a smaller satellite office located up in Edmonton. We've got one office here in Toronto, and we're hoping to expand across the rest of Canada shortly. So we have 8 corporate partners that we've confirmed so far. 3 of them are with the Alberta government. We also have Boehringer Ingelheim, which is signed on with our health vertical, Ecol Electric, and TD Bank, which is part of our agnostic vertical, which is focused on machine learning and artificial intelligence. And we also have our supply chain vertical, who is partnered with Basiv and Trimac. So overall, we've accelerated more than 39 startups across Canada, and we have 13 employees hired to focus on these 4 vertical specific programs. All right, so going into Plug and Play Alberta, in this region, we've launched 3 industry-specific verticals: health, sustainability, and sector agnostic, which I mentioned. And the goal of this program is to attract top technology and investment to the region. Alberta is well known across the globe for its energy industry. So we're really trying to help entrepreneurs scale and grow, especially in the sustainability vertical, hire new tech talent, and propel digital transformation across the province. And the Alberta office has launched officially in January of 2022. So we're about 7 months in and launching 2 locations with 6 total partners, and those 39 startups accelerated so far. All right, so just a little bit of an overview of the structure of Plug and Play Alberta. So as I mentioned, the Alberta government has worked with us to bring us to the local market. So 3 bodies under the Alberta government have helped fund us and give us $13.5 million for the next 3 years to run accelerator programs across the region as part of the Scale Up Gap program with other accelerators in the community. So Alberta Innovates, Innovate Edmonton, and Calgary Opportunity Investment Fund is working with Plug and Play Alberta. And 3 of our major goals are to create and support 900 new junior tech firms, create over 20,000 new jobs in Alberta, and generate $5 billion in tech revenue by 2030. So that said, we have a big mission ahead of us, lots of work to do, but we're really excited to help diversify the economy in Alberta and establish the region as a tech hub across Canada. So going into the sustainability focus area in Alberta, so we have one program here under sustainability so far called the Clean Resources Program, which is tackling innovation challenges in natural resource industries. So some of the technologies that we cover in this vertical is renewable energy, hydrogen, water innovation, process optimization, and many more, depending on what our corporate partners are looking for. All right, so I'm going to give a quick recap on our Expo and Summit just to share some insights and get you excited for these programs and these locations in Canada. So we had our first ever Plug and Play Alberta Expo on May 31st this year. We had a very successful event. We had over 600 people register on Eventbrite, which was completely sold out. We had 380 in-person attendees throughout the day with 30 startup pitches from across 3 industry-specific verticals. And just to share a little bit of the behind the scenes, just to get you excited and tell you a little bit more about this event. So we did have the event held at the Ampersand, which is located in downtown Calgary. It happens to be our headquarters for the Calgary location, a beautiful venue filled with a room full of local corporates in the energy industry and beyond. We also had a Canadian stand-up comedian for entertainment, with lots of other activities, including a professional artist, a live NFT auction, some delicious food, and of course, some very Canadian swag, aka hockey pucks, of course. And then just wanted to touch base quickly on the Silicon Valley Summit, which some of you may have attended. Some of our startups in our Canadian programs also attended the summit. So we saw over 2,300 attendees throughout the week, each day, and we had startups pitching alongside 250 other startups from 17 industry-focused programs. And as you can see from this picture, this is Jacob Dewar from the Alliance to End Plastic Waste doing a presentation for the audience. So lots of high-profile guests and lots of entertainment as well. And then some of the highlights from the Silicon Valley Summit behind the scenes was, of course, this event was held at our Plug and Play HQ in Silicon Valley. We had a building full of global corporates, thanks to our operations team. We had lots of entertainment, so live music, bands, celebrity guests, food trucks, latte art, you name it. We had it, so it was a very exciting event for us. And just to hype you up, if you do get the opportunity to attend a Plug and Play Alberta Expo or a Silicon Valley Summit, you definitely don't want to miss these two events. They're lots of fun. There's lots of amazing networking opportunities. As you can see here, our CEO, Saeed Amidi, is here on stage with his good friend, Omid, who is part of the founding team at Google. So definitely, if you have the opportunity to attend any of these events, please do so because you won't regret it. Awesome. So if you have any questions about Plug and Play Canada or Plug and Play Alberta specifically, please feel free to reach out. Sustainability is obviously top of mind for a lot of our corporate partners these days. So definitely, if it's something that your organization is interested in, please feel free to reach out and we're happy to answer any questions that you might have. Thank you so much, everyone.
Thank you so much, Christian. And yeah, of course, if you want to find out more about the vertical, feel free to reach out to any of those emails or just chat myself or Gina here on Zoom. We can get you connected as well. Okay, now I am going to invite my panelists to turn on their cameras and join us here. Thank you all for being here. Do appreciate the time. I think I'd like to start by just maybe, quick introductions around. So Natalie, if you maybe would like to go first.
Sure. Hi, everyone. My name is Natalie. My background's in environmental science. I worked in renewable energy prior to joining Plug and Play, and now I lead the energy ventures team here. My role is pretty hybrid. I do both energy and sustainability and work really closely with Catherine.
Thank you very much. Maybe we go to Catherine next.
Great, thanks, Sean. Super quickly, because Kristen did kind of mention me at the beginning. I'm Catherine, or Kat. I'm based in our Alberta office. I have a background in mechanical engineering, worked in building systems for a bit, and then also at Accenture as a technology strategy analyst. And again, I'm working kind of across our pillars, so both in energy and sustainability, working closely with Natalie as well.
Thank you. And Alec.
Hi everyone, my name is Alec. My background is in artificial intelligence and machine learning. I've worked in machine learning consulting for a number of years, then in venture capital on the buy side as a generalist / technology analyst. I've done a lot of research and application of AI and machine learning to responsible investment and to ESG. I'm doing my PhD at the University of Toronto as well on those topics, and that's what ultimately led to the founding of SR.ai, which you'll hear more about later today.
Thank you, Alec. And last but not least, Eduardo.
Hello, everyone. My name is Eduardo. I'm the CTO and co-founder of Lynxai. I have a background in data science, and I've also done some sustainability work, some consulting work in sustainability in Luxembourg for a company.
Okay. Well, thank you. Again, really appreciate all your time being here and providing the insights. So, Natalie, I'd like to start with you, and I would like to start with just sort of the why around ESG investing. I was curious why ESG investing is important on both a corporate scale and also an individual level.
Yeah, I want to preface this by saying in the recent years, the sentiment surrounding ESG has been really widespread and varied. events like Tesla being taken off the ESG list has kind of shed some light on the differences of opinion of the topic and a little bit of the controversy surrounding it. Well, I wouldn't go as far as to Elon calling ESG investing a scam. I do think it has its flaws, but I think that it is a really, really necessary way of kind of moving capital markets towards long-term creation and into companies with better codes of conduct. Like a little bit of a caveat just in terms of ESG as well. A lot of people really focus on the E, myself included, with the environmental and really thinking that it's sustainability investing. But ESG does not really focus on just sustainability. And I think a lot of companies these days are really pushing their ESG ratings as their climate risk ratings, and that can lead to a little bit of greenwashing. But overall, ESG is a really important way to just move the needle in terms of a better code of conduct within a lot of the companies.
Okay. And those ratings being contentious is, thank you for saying that, because I think something I was also curious about, and maybe we go, Kat, to you next, but Eduardo and Alec, I'd like to hear your opinion on it as well. Just generally how companies are rated on ESG performance, something that the audience might like to know. So Kat.
Yeah, I can kind of kick us off. So traditionally, ESG ratings are essentially given by agencies that are like their whole job is basically to go in and rate these companies. These are companies like S&P Global is a big name that a lot of people will kind of register. Essentially what they do is they have analysts who will create aggregated data pools using both information that is published by the company. So standalone companies will publish ESG reports where they're kind of outlining both qualitative and quantitative achievements that kind of work towards whatever goals they've set across environment, social, governance. So these agencies such as S&P Global will go into their reports that they publish, but also to proprietary research and third-party reports, going to news articles to try to get an unbiased view of how this company is actually acting toward different ESG goals that they set. Again, this kind of goes back to what Natalie said in terms of there being some issues with it, even across agencies. If you're getting a third party to rate or give your company an ESG score, they use different methodologies and there isn't complete transparency on where they're getting these data sets. So the problem that we're facing right now is that even if two companies are assessed and get given ESG ratings, if they're from two different agencies, you're not necessarily going to get consistency across how they're actually performing, and it's not like apples to apples comparisons. So that's kind of where technology and like data, kind of what Alec is working on and Eduardo is super exciting. So I'll let them also add.
Yeah, and Alec and Eduardo would also love to hear how your companies specifically are rating overall ESG performance. You know, what type of data, are certain things weighed more heavily than others? So maybe Eduardo, we start with you.
Yeah, for sure. As Catherine said, right now you have these rating agencies that give ratings to companies, and these ratings are kind of a black box. You don't really know where they are getting the data from. You don't really know what variables they consider and the weight that they give to different variables. You have, for example, MSCI giving good ratings to Tesla, for example, and Sustainalytics, which is the biggest one in Europe, giving very bad ratings to Tesla. So they completely disagree with each other. At my company, the approach we took to kind of solve, let's say, this problem is to actually let our clients, let the investors decide which are the standards that they want to choose and that they consider relevant, and to tell us how relevant does a specific standard for them is. So, for example, one investor can care a lot about gender equality and another one about CO2 emissions, and he can say that CO2 emissions has a very, very big importance to him. And for example, gender equality doesn't. So basically they can say what is important to them and define how important it is. So basically choosing the variables and define the weights of those variables for themselves so that we can work towards the goal of setting a standard that is set by a lot of people and not only rating agencies that maybe have a political agenda on this.
Thank you. And Alec?
Yeah, I'll echo definitely some of what Eduardo said. So when it comes to ESG broadly, what ideally, what we really want to do is we want to value externalities and economic externalities that companies create, right? So the externalized costs that are due to environmental issues or social issues or governance issues. And overall, the goal of all of these standards is to get closer to actually valuing these externalities. But in the present state of affairs, discretion needs to be applied somewhere because these issues, A, are too complex, and B, aren't really objectively understood. So either the discretion needs to be applied by the raters or by the asset managers. And so in that sense, what we're doing is very, very similar as well. We're also creating technology to help asset managers understand what these externalities are and giving them the tools and the underlying data to value them themselves, right? Without, while inserting as little of our own bias as possible into the process.
Okay, thank you. And Alec, let's just stay with you. I was curious what you might say to asset managers who are concerned about investment performance and returns when it comes to shifting towards a portfolio that is more ESG conscious.
Yeah, from our perspective, if it is to compromise returns, that probably means that something's wrong, and the ESG information underlying is probably wrong as well. Because taking this externalities view, right? If we take the view that we want to divest from companies that have large externalities that currently are not being priced in, as the world is moving towards pricing the externalities in, there essentially is opportunity to front run some of these, broad sector movements, let's say, or movements from companies to companies, right? Companies who have less exposure to the externalities, towards companies that have less exposure to these kinds of externalities. So in that sense, actually, whether as an asset manager is, values driven, right? They believe it's the right thing to do, or they're value driven, they just want to do the best thing, they want to fulfill their fiduciary responsibilities, they should still be looking at ESG roughly the same way. And that's, that's what we look to enable.
Okay, that makes sense. And Eduardo, same question to you, investment performance and returns when it comes to shifting towards an ESG conscious portfolio.
I would answer in a very simple manner, I think. BlackRock CEO Larry Fink has said that the research indicated that the vast majority of companies with good ESG profiles actually perform better financially than their peers who don't have good ESG profiles. So I think that if the CEO of the biggest asset manager in the world says this, it is impossible to deny that the returns of ESG investment are higher. And I mean, ESG has been around for a while now, but people have only been talking about it as ESG right now. But in the 90s, you didn't talk about ESG, but if you saw that the company had a sexual harassment scandal on the news, you'd probably pull your money out of it. So that's ESG, basically.
Okay, I have a hard time arguing with that. Agreed. Okay. Natalie, for retail investors, what options are out there in terms of placing ESG investments?
Yeah. Well, I think that the first one that comes to mind is really just the main ESG funds. People have to be a little bit cautious when it comes to that, just because the management fees are a lot higher. Kind of goes into this idea that ESG is something that obviously a lot of people want right now, and so they're going to have to pay a bit more top dollar for it. Actually, what you said, Eduardo, was really interesting about how Lynxai, I didn't know that, where you can create your own dashboard and management score as to what's important to you. I think that that's probably the best way. There are green bonds or sustainability bonds that retail investors can participate in. There's also the actively managed funds, the ESG funds. Right now, also, this kind of new recent trend is this direct indexing, which allows retail investors to really only hold stock in like a fund structure that really aligns with their values. But just in terms of different areas that startups are innovating in, there's some really interesting companies where they're trying to open up renewable energy infrastructure investing for retail investors. So like Intention out of Houston, and then Bloom Impact Investing out of Australia. So I think that that's going to be a new asset class that hopefully one day retail investors can participate in as well.
That'd be great. Thank you. And Kat, I was curious about the regulatory space. The regulatory space in the US has notoriously lagged behind other parts of the world. I suppose actually I would gear this question more towards Canada for you. So curious, what developments do you expect to happen in Canada, North America, in terms of our regulatory environment?
Yeah, I can definitely speak to what's happening in Canada in terms of ESG reporting for those like standalone company reports that get published. Essentially, it's continuously changing because as this topic becomes more and more popular, obviously the government is creating more restrictions and guidelines into how companies need to report on their ESG metrics and those qualitative and quantitative achievements. Ideally, as these restrictions get a bit, or the guidelines get a bit more strict, we're going to have ESG reports coming out of these companies that are more aligned with one another. This doesn't necessarily remove the bias that you're getting from the different agencies using those different frameworks and the third-party data sources that they are going to be going to, but it does help create consistency with how companies are reporting their internal findings. Which ideally long-term will kind of help with the greenwashing and the issues with inconsistency in the space. But yeah, tackling the actual ESG letter grades that they're receiving from these agencies is definitely a separate issue from this. But in terms of reporting on a company basis, the government is definitely stepping in and making sure that there are restrictions that they have to follow, and they can face litigation risk if they don't stay up to date with this.
Okay, glad to hear that there is policy movement there. Natalie, same question to you, maybe more so geared towards the US and their regulatory space.
Yeah. Right now in the US, I think it's more than 90% of S&P 500 companies already publish ESG reports in some way, shape, or form. And we've kind of discussed on previously some of the issues associated with that. Overall, there's been a lot more pressure within the US from a very much a move from like, tell me these kind of fluffy ESG reports that have a lot of discrepancies in the data to more of a show me. So most recently, the Security Exchange Commission is considering new rules that would require more detailed disclosure of climate risks and greenhouse gas emissions. They also created a climate ESG task force about a year and a half ago. And just in the past 4 months, it's helped at least bring 3 enforcement actions into play. So I think that if these rules eventually get passed, it's going to mitigate it's going to require for all publicly traded companies climate risk reporting, as well as scope 1 and 2. For scope 3, it's a bit more nuanced. They're going to do that based on materiality. So if a company has proclaimed, scope 3 emission goals, they'll have to report on those. So I think that especially with the tailwinds with the Inflation Reduction Act and people really pushing for climate action now, my fingers are crossed that some sort of standardization from the SEC comes.
Agreed. Thank you. This question, our last question, is for everyone, and it is just a foresight into the ESG investment marketplace. Alec, maybe start with you. Curious where you see ESG investments being in 5-10 years and beyond, in whatever kind of frame you want to put that in.
Yeah, so absolutely see a lot more ESG integration happening. As folks mentioned, as reporting guidelines become more standardized, there's more alignment on the frameworks. I also expect that more and more work in valuing these externalities is going to be done by investment analysts, right? So less so as often happens these days, where there might be a sustainability team or an asset manager will completely rely on the external raters to do this work. There's going to be more and more ESG integration, right? So ESG and evaluating economic externalities that companies create simply just becoming part of investing, right? And all of these ESG issues will become contingent liabilities that investors look at rather than pure, or so it'll kind of move away from this values-driven
pragmatic in terms of how investors actually look at these issues.
Sounds good. We're hearing you just fine at the end there, so no worries. And Eduardo, to you.
I think that in maybe 5 years and beyond, ESG will be something so natural to investors that we won't even use a term like ESG investment market. We will just talk about the financial markets and consider ESG criteria as fundamental, I would say, as a company's revenues or profits, let's say. So I would say that in the future, I see ESG as a deeply rooted and natural part of financial markets.
Okay, and Natalie, forward looking.
Yeah, I'm just going to echo Eduardo there. I think that the risk reduction aspect is the most appealing part to investors around ESG. So I think that in the future, it will be something where the ESG label isn't necessarily considered, and these principles will just be the norm for 21st century investing. I think that approaching these externalities and internalizing them is something that companies will start looking at just from core strategic initiatives.
Okay, thank you. And Kat, and we, by the way, have a couple of questions in the Q&A, so we're not quite done after this.
Yeah, not to sound like a broken record, but I'm also just going to reiterate what everybody already said. I do think it'll become somewhat decentralized. And by this, I mean, we're not going to have these like S&P globals that are giving these ratings, but instead the tools and the technology that are being built with startups like Lynxai and SR.ai are just going to be used by the investor community, and they're going to be able to make their own judgments based on kind of what they prioritize with data that they can actually see. Like there's transparency into what's being put behind kind of the outcomes on these dashboards. So I think that we'll really shift away from using like a ESG analyst who's giving a grade, and instead it'll just be put in the hands of the people making the investment decisions.
Okay.
And I want to just add really quickly that it, like with the SEC ruling, it's not a climate rule, it's a disclosure rule. So there's always going to, I mean, that disclosure just is the kind of the baseline, I think is what we're going to see. And then that will inform action.
Okay, thanks, Natalie. Wanted to address these couple of questions in the chat. The first one regarding the regulatory space. The question is, how similar do you expect reg requirements and standards to be to EU regulatory requirements like ESG, MIFID2, sure I'm saying that wrong, and SFDR? Would open that up to anyone here.
I can start?
Yeah, that'd be great.
Cool. I think in North America, they're going to be less stringent. Definitely in the US, and I think even in Canada, they're going to be less stringent. I think right now it's interesting with some incoming regulations in the EU, arguably it's leading to more greenwashing actually, because the requirements are so stringent, then asset managers don't have bandwidth to look at sustainability or ESG beyond just pure compliance, right? And so therefore there's a lot of kind of rubber stamping that's happening because asset managers are going, okay, I need to look at biodiversity. I have no bandwidth to do this. I'm going to use whatever data point I can obtain and just say, okay, I did it. It was part of due diligence. And of course, there's a point where that becomes counterproductive. So actually, I would hope that they're less stringent, as much as maybe, selfishly it would be good if they're more so, just because of this kind of unintended consequences that I think the EU is experiencing right now.
Interesting. I hadn't thought about that. Okay. And the last question here in the chat is maybe one that we've danced around on this panel, but the question is, do you believe that ESG scoring is relative? I can
answer, I think. I believe so. I believe they are extremely subjective and relative, and I can answer that in a very mathematical manner. Credit risk ratings have a correlation of around 0.9, 0.95 from 0 to 1, and ESG ratings have a correlation of 0.6, 0.65. So it's very far from being good and from being objective.
Okay, well, thank you for the quick math on that. All right, that about wraps it up. If you have any more questions that you'd like to ask, feel free to reach out to me or anyone else that has been here. We will get you connected and happy to answer those questions. But for now, I just want to say a big thank you to everyone who joined on the panel. Natalie, Kat, Eduardo, and Alec, thank you very much. Okay. Now we will move on to the pitch portion of the event. Just some quick housekeeping. If you have questions, submit them using the Q&A button at the bottom of your window. Use the chat feature for general questions or comments. Always open for just general comments. I think people always love it when it's a bit more interactive. And if you are not presenting, please remain muted. Okay. So we will have Bitgreen, Lynxai, SR.ai, and Cyan Reef, and each one will be 5 minutes. If you would like to meet with any of these startups, there will be a poll pop up after each presentation, and just respond accordingly. Okay, first up, we have Bitgreen.
All right, hi, my name is Gilad. I am the co-founder of Bitgreen and also the lead on partnerships. And we're an impact-focused company, one that's utilizing Web3, or some know it as blockchain, as a means for achieving our goals. And those goals are basically taking on this ridiculously large number. After COVID and the Russian aggression sets in, this has probably doubled. But at this point, with these numbers, it's mind-boggling no matter what. And truly, our aim is to facilitate one of those 50 trillion into carbon and green financing within 10 years through our rails. So what is our solution? Well, Bitgreen is launching an impact-dedicated blockchain, one that is entirely aimed at facilitating a diverse ecosystem of different initiatives that all focus on impact and sustainability. And frankly, some of them will come from Web3 native teams, people that have been in blockchain for a while, and some will come from organizations such as yours that may have a use case for blockchain and are looking for a home or a team to partner with and to build. In order to seed this ecosystem, we ourselves are launching a few applications. And given that we have a limited amount of time, I'll just focus on those first. So the first application is a marketplace for carbon credits. It's a place for project developers with high quality credits to be able to list and then sell to any entity that passes KYC in a compliant manner. The goal here is basically to enable the disintermediation of a sector that's very much the purview of brokers and rentiers. So you'll have price discovery, you'll have the ability to see every single project for what it's worth, including co-benefits, and purchase those credits. And this allows us to then set up basically funding mechanisms for the carbon credit emitting or the carbon credit issuing projects themselves. They're just like startups. They need capital in order to get to the point where they could apply for accreditation, be able to issue carbon credits. And so we facilitate things like forward contracts and other abilities to drive capital now, and in return, investors get high quality credits at a much cheaper rate, and they get to support really compelling projects, such as this one. This is our collaboration with an indigenous community in Peru for 2.5 million hectares of pristine Amazonian rainforests that are under immediate threat from palm oil companies and narco traffickers and others. What is our role? We connect between them and project developers doing the work on the ground. And then we help by facilitating forward contracts. Again, the ability to purchase future high quality credits at a much discounted rate, and also support projects such as this to be able to add to your ESG portfolio and other stuff of the sort. If any of this is of interest to you, reach out. We have a lot of these opportunities. And the second big application is what we call the debt marketplace. This is basically meant to be a marketplace solution for impact investing. The ability to democratize an asset class, which is presently at about $1 trillion or less. And the biggest pain points that are in this sector are around lack of access to quality deal flow, lack of standardization, and then also, of course, the ability to have liquidity through a secondaries market. All three are solvable with blockchain, and that's what we're building. And so in this state right now, some of the deals that we are already lining up for the impact investing marketplace include a hydropower plant that will give electricity to an entire West African nation for the first time, EV charging stations and other project finance, and then also working capital for microfinance institutions and other triple bottom line opportunities of the sort. It's where anyone from accredited investors, eventually anyone who passes KYC, two entities are able to get access to quality deal flow, see the deal kind of taking shape from the get-go in a transparent way, which is what blockchain can bring to the table, and eventually be able to trade in a secondaries market to drive a lot more de-risking and a lot more funding into the space. And at the end here, just to say, this specific application is still a bit in the design phase, and we're looking for corporations such as yours to come in as design partners, whether you're looking to be investors, suppliers of the deal flow, or perhaps you would like to facilitate things like insurance policies or credit licensing and anything of the sort. This is a great opportunity to get on the ground floor in this world of Web3. So with that, feel free to reach out anytime. Any issues regarding the world of blockchain and Web3, anything of the sort, I'm here for you. Thank you.
Thank you very much. We now have a poll up on screen, so just respond if you would like to meet. I'll leave this up here for a few seconds. Okay. Hopefully everyone has had time to answer. Thank you very much for presenting. Next up, we have Lynxai. So I will just invite you here to take over the screen.
Hello again, everyone. Today I'm here to present Lynxai, a data-driven platform that makes ESG investment more efficient. This is our team, me, the co-founder and CTO, Tiago, my co-founder and CEO of the company, and Ryan and Tiago that have been helping us with developing our business and our products. So why ESG? Both myself and my co-founder have been caring for sustainability issues for a long time, and we always have had a dream of creating a successful business that could also help the world to become more sustainable. In Lynxai, we believe that ESG is the greatest opportunity there is to make a change for the better in the business world, because ESG brings a new way of looking at the financial markets, because now we can finally combine sustainability with strong investment returns, therefore attracting the money from asset managers that can change the world by investing in sustainable businesses. Our target market are asset managers, investment funds, and investment banks. So basically, anyone that has a portfolio with a lot of companies and wants to bring ESG into those portfolios and manage those portfolios with us. The market size worldwide in terms of ESG investment is huge and is estimated to reach $53 trillion by 2025. Which represents about 1/3 of all assets under management in the world. So we could say that by 2025, 1/3 of all investments will be made while considering ESG as a major factor, which is huge for this market. We identified the three main problems that our customers had, and that's why we came up with this company and with our solution. And those problems were complying with ESG regulations, processing ESG data from different sources, and having accuracy on ESG data. And our solution was to provide a new taxonomy tool that helps our clients to comply with European regulations. EU taxonomy, if you don't know, is one of the new big European regulations. And it is very relevant to say that this tool is easily adaptable to the future regulations that will be released by the Securities and Exchange Commission in the US and in Canada and whatever it is. We also aggregate data from all of the data providers that our clients go to so that they don't have to spend a lot of time switching between platforms and they can just go to our platform and have all the data that they need in one platform only. And basically save a lot of time and a lot of money in a lot of subscriptions that they would have to make to have access to many different platforms. We also cross-validate this data that we collect from all of the data sources that we go to, so that we can make sure that the data that we present is reliable and accurate, and possibly alert our clients to misinformation and greenwashing. This is just a quick chart of our positioning, some of our main competitors, and as you can see, we are the company that goes to more data sources, and that probably is now giving more relevance to giving information real time, because real-time information is very, very important in terms of monitoring the financial markets and the ESG risk that the company has. And why choose us? The answer is short and simple. We monitor ESG trends across social media so that our clients are alerted to any positive or negative trends that can influence the companies in their portfolios, therefore making risk management easier and more accurate. We also filter all of the data that our clients see according to their standards, so that they don't waste time with data that is not relevant for them. Our business model is a SaaS with a monthly recurring revenue, and our average price point is about $8,000 per month. We have a 4-year projection of 500 clients, and our projected annual revenue would be $48 million. These are some of the pilots we already have. We are working with some banks in Portugal, and we have a lot of development partners like BlackRock, NetWest, and BNP Paribas, and we hope that one day those partners will be making business with us. Thank you very much, and if you have any questions, don't hesitate to contact us. We have our emails there, and yeah, let's keep in touch.
Thank you very much, Eduardo. We're going to put another poll up on the screen, and I'll give you a few moments to answer. Okay, hopefully that's enough time. Everyone has gotten their answers in there. Thank you very much, Eduardo. Okay, moving on. Alec, feel free to take over the screen.
Hi, everyone. My name is Alec. I'm CEO and co-founder of SR.ai. Our story started about 3-4 years ago. So by background, I'm in AI and machine learning. I worked in machine learning consulting for about 6 years. And near the tail end of my time there, I started doing a lot of work in natural language processing, or NLP. This was 2018, 2019. Technology around processing language data changed drastically. And when I was at Deloitte, I was leading several projects to capitalize on these technologies and build risk sensing solutions for some of our clients. And I became very interested in, if we were to do some of these things at a much larger scale, how could this be applied to the world of asset management, and specifically to the world of responsible investing, or ESG? So the first thing I did is I started writing some research papers in the space. I partnered with the research lab at the University of Toronto called Risk Lab, and we set up a research program there on machine learning and ESG, and it has grown quite well. We've done industry research with Allianz Global Investors, worked with some folks from UNPRI, the kind of premier semi-regulatory body in the ESG space for asset managers, and developed some really, really interesting research connections. And I left Deloitte, worked a little bit of time on the buy side myself, so firsthand how painful research still was, even in private markets, working in venture capital. And I realized that these technologies that we've been prototyping at the university still were heavily underutilized in the ESG research space. And so at the beginning of last year, I started full-time looking to commercialize some of these technologies. That's gone quite well. We have several commercial partners now, including Picton Mahoney Asset Management. They're one of the top names in alternative asset management in Canada. That's one I can disclose. We have several more private asset managers using our solutions, both on the fundamental and the quantitative side now. And we're growing rapidly in terms of commercializing our technologies. So the high level problem in the ESG space is what we've discussed extensively on the panel already. There is a lot of fragmentations in terms of regulatory standards, and it's very difficult for asset managers to perform their own ESG due diligence. They're served by technology. there's increasing importance in the space, both from their institutional clients, as well as just in terms of pressure on their investment process, and more folks incorporating the ESG research into their views. And as asset managers do their day-to-day process today, they rely increasingly, or they rely a lot on the external raters that we discussed extensively throughout the panel. Those ratings lack transparency, they're all different, and they're very high level, making it impossible to interrogate how they're made. And so investors are faced essentially with an impossible problem: either perform their own manual research and redo the work of the raters, which takes too long and they have day jobs, or blindly trust this information that's provided to them. Artificial intelligence is a great solution for this. It's not actually feasible to automate ESG ratings completely, even with all of the latest and greatest technologies, because issues are too complex and there's a degree of subjectivity. But what is possible is to take all of the information out in the public domain and reports that companies generate and aggregate it in just the right way, where it becomes a lot easier for a human to absorb what is the information out there, what are the main externalities and the key metrics associated with them, and essentially make their own decisions on materiality of these particular issues and overall impact to the company. This is what our platform enables. It's live today with a number of asset managers. It allows them to save lots of time in ESG research, improve their overall investment process, and eliminate a lot of tedium that otherwise would go into researching some of these issues. We have a really strong team to tackle these issues. There's me on the AI, machine learning, and finance side, our CTO, Joseph, who was a founding employee at Irwin, now leading Toronto FinTech, and worked with me a number of years at Deloitte, including on some big data initiatives, and our CRO/COO, Vladimir, who has close to 10 years experience in end-to-end complex sales and operations. Thank you very much. Our contact is here. It would be great to have a chat with anyone who's interested in some of the work they're going to do.
Thank you very much, Alec. And thank you for being on the panel.
Of course. Thank you for having me.
We'll let this poll stand here for a few more moments. Okay. All right, moving on. If we could do the next slide. Okay, Cyan Reef. So I will invite you to turn on your camera and share screen as long as we switch it over here.
Yeah, thank you. My name is Vlado Kisuki. I am the founder of Cyan Reef. And today I would like to talk to you about our Cyan Reef governance solution. So I am a professor of finance at a French business school, Audencia Business School, and myself and my team have been developing financial solutions for over 20 years. And you can find them in the whole supply chain of financial services around the world. And we are today developing specifically governance solution, which is focused on small investors and ESG and impact-oriented investors. We are developing this solution because there's a very serious problem in the asset management industry, and basically small investors, retail investors, are invariably getting exploited. That's wrong, it's frustrating, but unfortunately it's happening all the time. Small investors don't have a proper representation or fiduciary tools to really enforce their rights and to represent their interests. So today, we have the tools that enable us to provide them with proper representation, proper information, so that we can protect the interests of the investors and their ownership rights. So how do we do it? First of all, we figure out what is wrong with the assets or the investments that they're making in terms of the governments, and we empower the investors through the active ownership tools. Specifically, the first part of the governance solutions is asset oversight. So we're doing portfolio screening on a very wide range of the governance issues, ESG issues, and impact-oriented issues. And Next, we give them active ownership tools, which include the active and proactive or activist representation, the voice in voting, in proxies and running proxy campaigns. And finally, we also work with asset managers and institutions to facilitate the governance solutions for their retail customers. This is based on the governance framework developed by myself together with my research team, and it goes beyond the traditional governance services because it also encompasses fundamental issues surrounding the fairness of the corporate management, ESG, corporate social responsibility, and other issues that are important for the end users. So how it works, users can sign up for the service. They have to provide us with their assets and with their portfolios, and we evaluate, we continuously screen and evaluate these portfolios and continuously provide the representation to the investors so they can estimate the various aspects of the governance. We can pinpoint specific issues and the problems of the given assets. And the service is implemented as a subscription service. And to give you an idea, at the moment, the governance services market is basically in the hands of two companies, and we are expecting that there is a large opportunity to make this market much better. At the moment, basically the system is stacked against small investors. They don't really have the tools that they should have to be properly represented and to execute their fiduciary mandate. So thank you so much for your attention. I will be happy to connect with anyone who is interested to collaborate. Thank you.
Thank you very much, Vlado. And as before, we have the poll up on the screen here, and I'll give you a few seconds to answer that. Okay. While you answer, we are going to move on to the next slide and just wrap up here. Just wanted to let you know about the next Plug and Play Insurtech webinar, which will be on September 15th around long-term care and insurance trends. Additionally, there will also be an event around gamification on August 31st. Gina has just put the link to this long-term care event here in the chat. And then also I wanted to let everyone know about an event called Chicago Innovation Link on September 8th. We'll be hosting an in-person event for partners to gather and chat about innovation best practices, as well as do just a bit of networking and maybe some drinks and some food. Okay, so that concludes this event. Thank you very much for joining. We have an NPS poll here on the screen. If you'd like to answer that, that'd be great. But otherwise, I hope you have a fantastic day, and thanks again for joining. Bye, everyone.